So we saw the lira get smashed in the instant wake of the coup. It recovered, but then the Turkish stocks got slammed. What do events like this foretell for investors in Turkey going forward?
I'm a little disappointed that Moody's released that statement while I was waiting to come on air, because my whole pitch was that Turkey is an investment-grade country at this juncture doesn't make any sense. I think there have been a lot of questions in the investment community about Turkey and whether it warranted investment grade for probably since the beginning of this year. Certainly on the heels of a coup attempt, you've got to figure that the economic policies of the country are going to take a back seat to Erdogan establishing political control. So I think, equities taking a hit makes sense. On the fixed income side where we look, the country widened by 25 basis points, most of the corporates 40 to 60 basis points. I think you're going to see more of that.
So if you're an investor and you held positions, whether it's in Turkish debt or Turkish equities, do you get out of that, or do you hold on to your position based on whatever fundamental reasoning there might have been months ago or years ago whenever you got into those assets?
It probably depends on what kind of strategy you're taking. I think anybody who's a short-term trader should probably get out of the way. I don't see this situation getting better before it gets worse. We've seen time and time again in emerging markets, when a government focuses on consolidating political control, the economy suffers. It never gets better.
Well, describe that path. What's the time frame in which things kind of fall apart? Can it take a while, or does it happen abruptly and in stages?
Well, you're seeing growth slow up already. You're seeing inflation pick up a little bit. And obviously, I don't think you're going to see a big bump in economic activity. Tourism is not going to, all of a sudden, Turkey's not going to be the favorite destination for people for a while. So there's an immediate impact, but I think that generally this can take years. You can really start pulling apart an economy as if you start getting the leadership focusing on consolidating political control, they don't care about the economy, they care about politics.
A quick follow-up here is the central bank, of course, is going to meet tomorrow, and economists are expecting a rate cut, 25 basis point rate cut. Traders, however, are not counting on one. They're thinking that the central bank will stand pat because of Turkey's increased risk profile. Does it matter at this point what the central bank does?
Listen, putting some liquidity in there to help manage the FX is one thing, but starting to widen out rates, we'll see what happens over the next few weeks. But if investors, especially on the back of an announcement like this, Fitch came out earlier today and flagged the issue that, stating the obvious, a coup attempt is not going to help the economic situation. You're probably going to start seeing downgrades. And at that point, 25 basis points is not going to bring a lot of people in the domestic bond market.
You mentioned that when it's never a good sign for growth when a leader starts really consolidating power. Can you give an example of a country where you feel, okay, we've seen this playbook before and this is how it went down?
This might be an extreme example, but if you take a look at the last decade of Argentina, the issue there was Kirchner, when he became president, began to just try to consolidate political control and let the economy, any economic decisions he made were geared towards him sort of, making sure that he was able to control the political situation. So, it cost Argentina a good 10 years. I don't know what's going to happen in Turkey, but if you see this rupture between Erdogan, the EU, potentially with the US, this is not constructive economically.